millions and millions of people watched live stream for free called the Real Estate Reality Check. We addressed several things in that hour, and we don't have time to address them all right now. But a lot of people were predicting 2008 again, that real estate prices were going to absolutely tank. We said they are not going to tank because there is a pool of buyers that is much larger than the pool of sellers still, and the supply-demand curve will maintain the prices, meaning when you have a whole bunch of people trying to buy a few things, it holds prices up. It's that simple. When there's a scarcity, prices go up or at least are maintained at a minimum. And we said, of course, the exception to that is the areas where people are leaving en masse, and we showed a map of the number of people that have left New York and left California and have left some of the high crime cities and crazy politics of all kinds, defund the police or whatever else cities. And so and we said, so far, though, even those areas, California, New York, Seattle, Portland, have not seen decreases in real estate values. That was about 2 months ago, 3 months ago. Reports are coming out right now. We just got one dropped on the desk. Western U.S. continues to lead in home price declines. So now California is seeing the mass exodus of California starting to affect pricing there in some of the areas. San Francisco's taken some real hits.
3.4%.
Of the top
decrease.
100 cities, the city that has taken the largest drop in price declines so far is Seattle. High crime situation with the anarchists taking down the entire downtown area and have made it impossible to function economically in that beautiful downtown area of Seattle. It's a gorgeous city, or it was. And the lack of law and order always screws up economics. When you can't operate because people steal all your stuff or burn it, it's very difficult to run a business. It's kind of basic, common sense stuff. And so these areas are getting hammered. Their home appreciation values dropping like crazy. Meantime, Louisville, Birmingham, southern cities in Texas, southeast are going up in value. During the time some of you predicted that Dave Ramsey, this isn't going to age well, it's going to be 2008 again, the entire thing's going to crash. And I kept telling you, no, here's the numbers, it's not going to crash. And so we're here to tell you the numbers are coming out, and we told you so.
Yeah, this is real data. And we used data last time, too. And we're just using the newest data that's showing that it's a different time, and it's not all down. Some areas are going up, some areas are going down. And there are winners and losers, another article states. And yes, those that got houses when the interest rates were super low are cheering for themselves. But those that want to get into a house, it's not too late for you either, because the competition has slowed down.
Well, here's what happened. We had this huge increase in 20, record house price increase. In 21, 18% up, right? 29% up in 20. And then we said, 22 is going to be 7 or 8% up, which appears to be holding nationally. Now, locally, we've had some areas that are down 5% or down 10%. We've had other areas that are up 5%, but it seems to be that we're going to be in the 5 to 7% by year end. That prediction was made by other people, but the data that we had seemed to support it, and we went with that, and it looks like that's going to be about true. In 2023, we said is going to return to normal price increases in homes of 2 to 5%, and the data is still indicating that that's what's going to happen. All of this to say that you're watching the news, and you know the inflation is horrible, the worst inflationary economy in 40 years right now. And you're going to the polls in a week, or you're going to the polls right. I'm going today to early vote, make sure I, do what I can to correct this. You're fired. That's the message. And so, you can't run something. You don't get to run it anymore. That includes the country. Okay, but anyway, all of that aside, the thing that's happening with real estate is interest rates have gone way up. They're bumping up
Almost
close to 7% now on a 30-year fixed, up from the 3s. And 7% in the scope of a life as long as mine is very low. I remember lots of years selling real estate 11, 12%, 10%, 9%. Lots of years I was on the radio, it was 10%. When I started this show, it was 10%. And so then it came down to 6, and we thought we were in nirvana. But then when it goes to 3 and it goes up to 7, see, 7's not good as compared to 3, but it's really good compared to 12. So it's an emotional thing. So here's what I'm telling you. The other article we got was from Bloomberg. It talks about the people that have bought homes, their values are continuing to go up, especially if you bought like in Austin, Texas, Nashville, Tennessee. You bought in these areas, Dallas, Texas. You're buying in Phoenix, Arizona. Have they gone down a little bit in some of those areas in the last 4 or 5 months? Yeah, a little bit.
Well, asking prices too.
And the price asking, because some of them had really gone crazy up. And so it's settling, but it's not diving, it's not crashing. And what's happening is these people that bought are going to become inordinately more wealthy over the next 3 years than people who rented, because rents are also going through the roof. And so rents are sucking the disposable income out of the renter's budget, where when you buy, because guess what happens to rents? Every year they go up just about. Almost every single year rents go up. When you buy a house at 6% or 7%,
your mortgage stays the same.
It doesn't go up. You're locking in one of your largest expenses, and the value of the property is going up because it's not crashing. Unless you're in one of those areas we mentioned, right? It's not crashing. Overall, we don't have a 2008 situation, and you're going to become wealth inequality based on home ownership is going to be more and more of a thing. And so what all that is to say is, if you haven't bought a house and you're thinking about buying a house and you're sitting on the sidelines waiting on interest rates to come down, they're not going to come down in any minute. And waiting on house prices to come down, they're not going to come down. They're going to go up. You need to go buy a freaking house right now. It's a great time to buy a house because there's not a line of people around the block trying to buy that house right this second. You're not going to steal it. And if you're getting ready to sell a house, you need to have the expectation it's going to take you 90 days to sell a house right now, like it has most of the time in the history of real estate. Most of the time in the history of real estate, that's how it's gone. And so you need to have a 90-day expectation on selling and negotiating on your price. That's normal. And if you're thinking about buying, you ought to go buy right now.
And like we said, a real estate reality check, you can always refi later when the rates come back down.
Yeah. And if they come back down to 3, and they might, sure hope they do, that'd be wonderful, then refinance and get rid of that higher mortgage, but you locked in the price of the house.